And speaking of money and your money management, it is a very busy time, as we mentioned at the top of the program, for parents right now getting their kids off to college. We gave you that live look at the University of Michigan. The move-in underway this week, and it's also an important time for moms, dads, family members to talk with their kids about money. Why? Well, a record number of college kids are dealing with soaring debt. So let's bring in financial expert Dewey Steffen. He is the CEO of Great Lakes Wealth. Dewey, thank you so much for joining us today.
Hank, my pleasure. Good to see you.
Good to see you too. Hey, before we get to the college kids, let's talk about this information right now coming to us from the Fed. How significant could this be if we do see this rate hike, or rate drop rather?
Right, it'll be a rate drop, and the Federal Reserve's next meeting is September 17th and 18th, a two-day meeting. And this information that came out today just confirms what we had thought in previous weeks of information. And on Wall Street, we always say, don't fight the Fed. And if the Fed is raising rates to slow things down, that's a scenario that we don't want to mess with what they're trying to accomplish. In this scenario, don't fight the Fed, meaning they want to lower rates to help stimulate some growth in the economy. That's a good thing, and Wall Street likes it, absolutely.
So what does it mean for the everyday consumer then? Could we see an impact in the local real estate market? Could we see prices across the board drop a little bit? How do you think this impacts the everyday Metro Detroiter?
Oh yeah, it impacts everyone, and it's amazing because, again, if you have debt, now the interest rate you pay on that debt will go down. And so whether that's a mortgage going from, we were down as low as 3% up to 7%, and the interest rates of the mortgages have already, front running this information. So mortgages on a 30-year fixed are back down, to 6%. They will continue to drift lower based on this information. So credit card debt, interest rate debt that you have anywhere should come down. That will encourage you, maybe not so positively, to spend more on that credit, which could sometimes be a bad thing. But in general, in mass, that's a good thing.
So as we are talking about debt and college kids, which we mentioned a little bit earlier, busy time for move-in. I know you have some college students of your own. How important is it for parents to have these conversations with their kids? Because we know they get back to campus, a lot of them get hit with those credit card offers. What conversations should they be having with their children?
Yeah, tell them you love them and wish them well on their new journey of college, or if they're going back again. Again, be responsible, and as I always say to my kids, make good decisions. And whether that's on Friday night being social or with your money, absolutely do the right thing. Build a budget. Do not spend beyond your means. And so as a college student, you need to be fiscally responsible, absolutely.
So what do these college kids do then? They get hit with so many of these offers. Are these credit card offers, a lot of times we see people setting up shop in the student union or near campus. Are they designed to make kids fail? I mean, they're pretty high interest rate typically, right?
Well, again, they would tell you that they're offering a service to college kids that may not have much credit or much, of a history to help them build that credit and to have a device that they can use in an emergency. And so whether you do take the college offers that come on campus for credit cards, or you've done some research as a family and are using, a different resource for a credit card, number one, know what you're getting into before you get into it. And number two, it really doesn't matter where the credit card comes from, what the interest rate on is going to be. You need to not use it unless it's an emergency. And when you do use it, you need to pay it off in full every month.
How do you advise kids kind of work just using cash then and set up a budget that way? Is it once they start getting credit in their hands where it becomes a problem? I mean, I know there's debates about, setting yourself a budget and just using the cash available to you. And once you've run out of that cash, you're kind of done for the month.
That's absolutely it. So as a parent, you can put a certain amount into a bank account. As a student, you can understand what you're willing to spend, and it can be cash, old traditional cash. It can also be, via Apple Pay, Zelle, that sort of thing. But absolutely, a debit card can also serve that purpose. We kind of frown on using debit cards for some risk factors, but absolutely have your money, not someone else's money, and that's what a credit card is. It's actually someone else's money.
You know, we talk about Zelle and Venmo too. It's important that college kids and important that all of us are aware that there are a lot of scams involving those forms of payment. You really have to pay attention to who you're paying and understand that sometimes scammers can hack into those accounts.
100%. And that's not just for college students. That's for all of us. That's for you and me, Hank. That's for our parents, our grandparents. So everyone needs to be certainly diligent and be aware. And if something seems too good to be true, it probably is. Or if someone's address or name, just something doesn't smell right or sound right or look right, it probably isn't right. So be cautious and make good decisions.
Dewey, thank you so much for the advice. I've got a first grader, so I've got some time to have this conversation with my daughter, but I know that these conversations are important for parents to have with their kids, and it's important information to not only keep their kids safe, but also help keep mom and dad's finances in check too. Dewey Steffen, CEO with Great Lakes Wealth. We appreciate your time today, Dewey. Thank you.
Absolutely my pleasure. Have a great day.